In conversations with new traders about trading and the trading process, I'm often reminded that what they're experiencing is the exact same thing that I and many others had experienced in the early days of trading. And actually, it's probably what 99% of new traders experience when they first open a chart and they learn about trading. And there's a lesson right there about not taking anything personally when you're trading, since what you're going through, it's not unique. I did approach the beginning years of trading a little differently than most. I never got hung up on the numerous forums or indicator hell, the $37 ebooks, or the humorous trading robots. I was always aware that if it was that easy, the failure rate would not be as high. At the end of the day, trades are made by humans. Even the algo trades had to be programmed by a human. And I realized that generally, my failings were going to be my own. Realization and acceptance, however, are two vastly different things. But you have to see a problem before you can fix it. During my communication with new traders, many times they judge performance by a handful of trades. If the system or the method has piled on the winners, they credit the system, and they credit their own trading ability. The losses, though, that's a different story. The losses are all about the system and the failings that it has. You take too many losing trades, and many people place the blame on the system, and they go on to search out a system that's going to serve them better. And that's usually not a good idea. The first thing a new trader has to do is look at the big picture. The system can never be defined by a handful of losing trades. It's the results of a whole that will paint a true picture of the system that you're trading. Besides, if you did a proper back test, you already know that a string of losers is expected, and that your system should be winning more on winning trades than it loses on the losing trades. The issue is that many traders look at each trade and decide whether it was a good one or a bad one to take. This type of logical and analytical approach is the wrong one. There's another approach that will lead you in the right direction. And what this means is don't have tunnel vision on results. Instead, focus on the entire trading process from start to finish. And if you have an edge, the results are going to speak for themselves. Let's pretend for a moment that this chart is indicative of your trading process. And number one, after seeing low momentum in the move upwards, strong selling action took place, and you look to position in the direction of the thrust down. Number two, price rallies and gives you a price zone to look for price to breach on a test. Number three, you need to see price range with a hint of selling over buying pressure inside of the range. Number four, when you see a strong thrust out of the range, you look to initiate a short at the close. So that outlines your trade plan. And in this case, everything is lined up in accordance with the trade plan. You enter your short order as dictated, and you let the trade play out. Now, this trade goes slightly in your favor before beginning a retrace back into the zone. And once price clears your range at number three, you just take your stop. So who's to blame? Well, the issue is that this is the third loss in a row, and after losing a total of 6% of your trading account, you head back to the drawing board because it's clear that this method no longer works. Well, how else can we look at what happened? Before trading any method, you've done your back testing, and you've determined that this method actually has a positive expectancy. You should also know what a normal string of losing trades will look like. So we assume that the trading method is not at fault, as it did perform well during non-optimized testing, and you have been able to be well positioned in prior winners. You look at the trade on your decision in the moment, and you execute it perfectly. Everything that needed to be in place to take a trade was there. You accept that losses are a part of trading. You look at your stats and you determine this is simply the nature of the trading business. You decide to make a decision only on the whole, not the singular trades that make up the whole. Dealing with outcome bias is a tough one, and it takes a ton of mental energy to overcome. But doing so will save you a ton of wasted time in jumping from strategy to strategy and dumping a potentially lucrative one. And this applies to winning trades as well. The win is not as important as the quality of your decision in taking the trade. So to answer the question, who is to blame? There is nobody or anything to blame. You focus on the process of implementing a positive expectancy trading method, and you accept that there is a random distribution of your wins and your losses. What this will do is not only stop you from jumping from method to method, but allows you to take full control over the only thing that you can control in trading, and that is your actions. And that is how you judge, through your execution of the strategy and the results of a basket of trades. Anything else, really, it's just a mental burden that will not produce the trading success that you desire. On another note, options trading has become very popular over the last few years. And NetPick's own options guru, Mike, he's put together a hot list of some of the best names to trade in the options market. And you can click here and you can download your free hot list to see what names Mike has been piling up the winners with.
Put that position on. Well, as a retail trader, you have a few different options. Okay, number one, you can just go ahead and go in and buy the stock. Okay, pretty simple, pretty straightforward. The problem with that is it's a $600 stock. So as a retail trader, it's going to tie up a lot of your capital to put on any type of a sizable position. Option number two is to actually come in and look at some call options. Okay, those call options, they're going to give you control of Priceline stock for a set amount of time. If you were to go ahead and